Here is a fact that sounds illegal, but is completely legal. A billionaire can pay a lower tax rate than the person who cleans their office. Not less money, a lower rate, a smaller slice of every dollar. And they do it without breaking a single law. How? Because almost everything you were taught about taxes is focused on the wrong thing. You were taught to fear the tax man and just hand over whatever is withheld from your paycheck. The wealthy were taught something completely different, that the tax code is not a punishment. It is a set of instructions. A giant menu of incentives, telling you exactly how to legally pay less. Most people never read the menu. Today, we are going to. We will decode why employees get taxed the hardest, how the rich quietly pay less, and the legal moves you can actually use yourself. Let's decode it. First, let's understand why employees carry the heaviest load. When you work a normal job, you earn what is called earned income. Wages, a salary, an hourly rate. An earned income is taxed at the highest rates there are. Worse, the tax is taken automatically, withheld from your paycheck before the money ever touches your hands. You never even feel it leave. You get the leftovers. Think about that order. You work, you get taxed, and then you live on whatever remains. The employee earns, gets taxed, and spends. There is almost no room to maneuver, because the system is designed to collect from you first. This is not because employees are targeted unfairly. It is because labor is the easiest thing in the world for a government to tax. It is visible, it is tracked, and it is collected at the source. So if you only ever earn through a paycheck, you will always pay the maximum the system can take. The wealthy figured this out a long time ago, and quietly stopped relying on a paycheck. Here is the secret the wealthy understand: not all income is taxed the same way. The tax code quietly sorts your money into different buckets, and some buckets are taxed far more gently than others. Earned income from a job sits in the most heavily taxed bucket. But income from investments, like long-term capital gains and qualified dividends, is usually taxed at a noticeably lower rate. Income from owning a business comes with deductions for nearly every legitimate expense. And income from real estate can be sheltered by things like depreciation, a paper loss that lowers your taxable income even while the property goes up in value. See the pattern? The system taxes labor the hardest and ownership the softest. The wealthy do not earn most of their money by working. They earn it by owning, by holding assets, businesses, and investments that are deliberately taxed at lower rates. Same dollars, completely different tax treatment. They simply moved their income into the friendlier buckets. Now, why would a government write the rules this way? It feels rigged, but there is a logic to it. The tax code is really a giant system of incentives. Governments want certain things to happen: more housing built, more businesses started, more investment, more jobs, more energy production. So they use the tax code as a reward program. Do the things the economy needs, and you pay less tax. When a wealthy person gets a tax break for building apartments, the government is essentially paying them to create housing. When a business owner deducts equipment, the code is rewarding them for investing and hiring. So the rich are not just hiding money in shady accounts. Most of the time, they are simply doing exactly what the tax code openly rewards, and collecting the discount. The code is not a wall designed to keep you out. It is a map. And the wealthy treat it like one. The frustrating part is that this same map is available to absolutely everyone. Most people just never read it. So how do you actually use this map, legally, as a normal person? Let's be clear, this is education, not advice, and the rules vary by country. But the principles are universal. Move 1, use tax-advantaged accounts. Retirement accounts like a 401k or an IRA let your money grow while legally lowering your tax bill, often immediately. This is the most powerful, beginner-friendly tax break on earth, and it is just sitting there. Move 2, become an owner, not only an earner. Even buying low-cost index funds shifts some of your income into the lower taxed investment bucket we talked about. Move 3, hold investments for the long term. In many places, selling after holding longer triggers a lower tax rate than quick trading. Patience is literally taxed less. Move 4, if you have any side income, learn which expenses are legitimately deductible, because business owners are taxed on profit, not on everything they bring in. And one critical line, tax avoidance, using the legal rules to pay less, is smart. Tax evasion, hiding or lying, is a crime. We are only ever talking about the legal map. So let's bring it all together. The wealthy do not have a secret, the legal loophole that you are locked out of. They simply understand one thing you were never taught, that how you earn your money matters just as much as how much you earn. Earn only through a paycheck, and you pay the highest rate, automatically, with no room to move. Earn through ownership, investments, and businesses, and you legally step into the lower taxed buckets the code openly rewards. The tax system is not a punishment to fear. It is a menu of incentives to read. You do not need to be a billionaire to use it. You need a tax-advantaged account, a habit of owning assets, and the patience to hold them. Start there, and you stop overpaying for the simple crime of earning a salary. If this opened your eyes, subscribe to Money Decoded. Next time, we are decoding the real difference between assets and liabilities, and the one chart that quietly separates the rich from everyone else. Your money has been decoded. Now go read the menu.